Welcome to TradeTheNBA.com. This is John's report. It's for the 29th of July. And while we had the NBI white popping above, all we ended up with was what we were expecting, which was a dip to the ABM yellow levels retraced, particularly since DOC green still riding over the DOC cyan, meaning midterm buyers over shorts, as well as the rising DOC red. Interestingly enough, though, that shakeout we're going to be looking at will need to continue to rise to new highs, given the fact that we're already at existing highs. The day's just starting, so we won't know where that's at for a while. But even with the white NBI above, we've got both yellow and magenta over the 33 level, which, again, also means that even if you're going to get some softness, it's still going to be mild, meaning contained. From an NQ standpoint, NASDAQ, a little bit weaker. So we're getting a little different reading, at least from midterm buyers net, but the short-term buyers that have been completely reset, making that stable. So it's also right above the ABM yellow at this particular stage, 14.968. It's at 97. So that's a little bit softer, not surprisingly, given the fact that it's the S&P. Gold taking a little bit more of a rise, given Powell's comments that inflation may be a little bit more than they anticipated. But I mentioned some details in the Skype chat about the whole idea of the additional mask mandates and the economic realities of trying to prevent hyperinflation, and really what some of this pandemic restrictions do is prevent the growing economy to the extent that it would create those price pressure demands that would cause prices to skyrocket super fast. So it's kind of a slow things down just a little bit to keep everything moderated so that it can absorb all the additional stimulus that has been injected in such a short period of time. Those comments obviously supporting the euro moving, because it's an indication that U.S. may even be spending more than the euro is going to as far as borrowing in that, and that's a net positive from a euro standpoint. From a Bitcoin standpoint, again, we talked about this. It had reached its base point. We got our buy signal all the way down here. Even from a daily standpoint, it was the same thing. That was down to 29s, and we moved all the way up to 39. So pays to be able to see those things coming. And then, of course, we hit exactly the exact same resistance points. 34K bounced right up to, and then shot right up to the other 39. And then we were talking about this basing above the 39 is critical for it to push to the next levels going higher. And of course, we're going to see any changes in that, so it's not really of an impact. From a 5K pre-market right now, we can see that from the sell-off that took place towards the end of the day, right back to the exact same positive extreme algo level at the 43.80, hit it perfectly, and then boom, immediately bounced right off that. Intraday was, I think, fairly nice. It wasn't that big a range again on an up day. I always kind of gauge it when you can see almost the entire day within one screen, pretty small volumes from that standpoint. But every time we reached peak towards the 100 and we got the crossovers of MBI, magenta going down where we were already in a DOC spread, we get the expected dip. It's when we get the white spikes coming over, it was a matter of waiting for the sells. It was a little more convoluted as we got to this peak, so it was harder waiting for that because it was just a slow trickle, and weight kept staying underneath the red there until it finally broke free. And that led to the move down, and then boom, the resurgence right back over with magenta, and that led back up to those highs that eventually filled all the way back right down again. So it's, again, the range is fine, getting pretty good movement and pretty decent clarity, so I think everything's pretty much in a consistent phase. Though definitely you have to say the volatility on those ranges is still a little bit above normal. It's calmed down in the last couple of days, but It's going to be more interesting as August begins because you're going to have more serious traders off, and that's going to allow for, I think, probably even bigger fluctuations as the B team, as I call it, gets in there and they start playing around with things, trying to prove themselves and make some returns during the summertime. As always, though, I will continue to update you with relevant details and updates with the indicators. Still working with the variant program, and in some cases, the current PNT2 that we've got from a broader section really seems to capture most everything that we're looking for. There's just going to be some exclusions I'm finding mostly in the areas between below the 23% and above the 76% on the Morganacci lines, and the buy configurations coming from there, because under the current setup, we're pretty clean, and when you start getting into chop areas and stuff like that, creating too many defined setups hasn't seemed to produce more of a benefit than we're already seeing from the guidance that the PNT2 A is offering on this. So, all in all, good stuff, but painstaking. But anything that moves us closer to being more and more exact, the better off we are. As always, though, we'll talk again later. Trade well.